Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. I'd particularly like to do today's video because yesterday on the USE Minis, which was Wednesday, August the 28th, was actually quite a hard day, and we were talking about this in our training webinar yesterday. So I think it's important to show when we have losing trades and also when we have hard days, because this is what trading is all about. People learn nothing from just seeing great setups. It's not what trading is all about. So let's have a look at the 3-minute ES. You can see here we had some sell setups coming up here, which were on red and black STF. So for standard traders, these would have been actually -1 hour losses. We know losses can and do happen. It's all part of trading, but this is why we use correct position sizing. So when the losses come through, the losses are kept small and under control of what we call just 1 R or one risk unit. This is why when the profits come through, if I scroll back a little bit further on the ES and I do the setup from the day before, come down here, the profit was large. So here the profit was plus 3.6 R, and for yesterday this was a double top, so there'd only been one trade. It would have been -1 R, and there's your other setup there, -2 R. So even though two losing trades, the loss was still kept small and less than the profit we would have had the day before on that trade. So again, red STF here, so you wouldn't have been taking these buy setups the day before. So that's a good reason to incorporate correct position sizing into your trading. But I want to look at what we were looking at in yesterday's webinar by the use of the larger degree trend. Now, the STF, like any other indicator, is lagging because it's based on past history. So what we need is a quicker way to identify a change in trend, and we do this by using our DPs on our higher time frame. And here you can see the DP left over from yesterday's trading webinar. So what we do with this, and this was actually on the chart when we were doing the webinar yesterday, so we're doing this actually in real time. We go back to prior pivots, and say there was one there, and we place these on the chart. Now the important thing about the DPs is they are leading indicators. In other words, they are on the chart before the market even gets there. That allows us to anticipate. The important thing there is anticipate changes in trend. And as you can see, the ES, which is the main market, it's the one that leads all the others, it's what we call the boss, came down, found support at our 15-minute DP. So what I was saying in yesterday's trading webinar was therefore the trend was now up. So what I was actually talking about is because the trend was up, you'd be avoiding these sell setups. So for the more experienced traders, you would have actually managed to avoid these. And this is a good thing that we teach the more experienced MTPredictor users, and how to take you above and beyond just the standard and automatic trade guidelines. This is why we always suggest you come into our training webinars, because we show you how to take the software to much more advanced levels. If we look at the NQ, and I put the DP on from, well, first I'll have a look at the swing up into this high here. You can see that it was actually a lovely 1, 2, 3, 4, 5. The initial target is the DP off the wave 4, which you can see was exceeded. If it's exceeded, we say we go back to the start of the sequence, which was from here, right mouse click, we place the decision point on from there, and that's where the market will usually go to and make a reversal. As you can see, again, that nailed this low absolutely beautifully. If I put the session breaks on, that was the low on the 27th, and as such the market was then reversing back up. So the trend on the NQ yesterday was again up. The only one that's a bit more difficult was the YM, because we had passed our DP support here. But because the ES is the boss, I was saying yesterday that the YM was rallying initially, therefore the large degree trend would be anticipated to be up. So therefore all these sell setups here you'd have been avoiding because the larger degree trend was up. However, because the trend was up, and actually later on in the day the STF actually turned blue, we did actually have a couple of buy setups here. So again, it's important to look at setups that would have actually produced losses, because it's no good just sweeping these under the carpet and hiding them. So even though we defined the large degree trend is up, you would have had a -1 hour loss there, and therefore another setup coming in just here, and you would have again been taken in and stopped out. So the YM yesterday, even with the larger degree trend analysis on the 15-minute charts, would have had a 2-hour loss. And again, it's important to look at these, because you do have days where losing trades will unfold. The only saving grace on the YM was a bit later on, because if I go back to the 15-minute chart, again we place our DPs on the charts in advance. So there was a pivot high made here on the 15-minute chart about halfway through the day. If you right mouse click and extend that out, can you see how the YM actually went up and hit that 15-minute resistance? There was actually an automatic DP sell on the 15-minute chart generated there. So the only thing an advanced trader could have possibly have done is taken the DP off here, which is the same as the 15-minute chart. Notice the market went up into that high, made a red sell bar. Our target would have been the DP from the prior swing, which was the last swing into the high. If I place the risk reward analysis around that, you can see there was your potential trade. It didn't quite get there, so if you'd have been stopped out on close, you could have possibly made back the 2-hour loss earlier with a 2.5-hour profit on that short trade. But that would have been quite difficult to catch unless you were a very experienced MTPredictor user. So the real summary of today's video is that yes, you get harder days. Yes, you get days where you have losing trades, and that's what trading is all about. And we actually use the larger degree trend on the higher time frame, in this case the 15-minute chart, when we're looking to trade 3 and 5-minute charts on the USE minis, and this would have defined the low there and actually set the large degree trend was up. Now that would have helped you avoid these losing trades on the ES earlier in the day. It would also have helped you avoid all these losing trades here on the YM early in the day, but as I've already stated, you would have still probably taken those and still come out with a 2-hour loss there. Whether you caught this trade down here at the end of the day would have been up to you. On the NQ, very similar picture. Large degree trend was up, therefore you'd have been avoiding these losing trades. So that's the summary of today's video. Is yes, you do have harder days, but if you actually go and have a look at Monday's video, or Tuesday's video I should say, where we looked at the YM from Monday, you'll see we actually had an absolutely amazing day with a beautiful Holy Grail trade set up on the YM from Monday. So this is what I talk about when I teach our customers that the markets go in cycles. I call it the cyclical nature of trading. So after a very, very, very good day on Monday, it's actually no surprise at all that we had a harder day today. But I wanted to do a video specifically showing that yes, you do get harder days, and yes, you do get days when losing trades come through, even when you're using the large degree trend like we do here to define the larger degree support and resistance zones, and as such make a larger degree trend determination.